Welcome to Talk Tickers. Today, we're digging into a really powerful Q3 earnings report from ATI Inc. that absolutely lit up the market. All right, so here's how we're going to break it down. We'll start with the big numbers, the snapshot. Then we'll dig into what's really driving them. After that, we'll look at the new guidance, see how the market took the news, and wrap it all up with our take on what's next. Okay, first things first. Let's get right to the headline results for Q3. So ATI just dropped a pretty significant beat on the bottom line. We're talking 85 cents for adjusted EPS. And on the revenue side, they came in just a little ahead of what everyone was expecting, at $1.13 billion. But here's the kicker, right? It's that earnings surprise. They came in a full 10 cents above what Wall Street was looking for. That immediately sets a really powerful bullish tone. So what's really going on under the hood here? What actually powered this outperformance? Well, it's a fantastic story of a company's strategic focus just paying off in a huge way. And this chart, this just says it all, doesn't it? Aerospace and defense now makes up a record 70% of their total sales. And look, that's not just a number on a page. This is a massive milestone in their big pivot towards those more profitable, higher value markets. And that strategic shift, it flows right down to the bottom line. You can see it here. Adjusted EBITDA margins hit a beautiful 20%. That's a huge 230 basis point improvement from last year. This is exactly the kind of leverage investors have been waiting for. And, the CEO, Kim Fields, really hammered this point home on the earnings call. It's all about their competitive moat. When she highlights that they're the sole source for these critical next-gen engine materials, well, that tells you just how deep and wide that moat really is. Nobody else can do what they do in this space. And it wasn't just the A&D mix either. It was just fantastic execution all around. You've got strong pricing power in their specialty alloys, a mind-blowing 51% growth in defense year over year, continued strong demand for jet engines, and on top of all that, they're returning cash to shareholders with $150 million in buybacks, just firing on all cylinders. Okay, so a great quarter for sure. But what about the future? Let's check out the guidance, because honestly, this is where the story gets even more compelling. Yeah, management didn't just nudge their guidance up, they came out with what we call a confident double raise. They're boosting their full-year outlook across the board. EPS, EBITDA, and maybe most importantly for investors, free cash flow is also getting a big lift. And the big takeaway from their commentary was pretty clear. This isn't just a one-time thing. They see this momentum carrying them right through the end of this year and well into 2026. And why are they so confident? Because it's all backed by these solid multi-year agreements. So, a textbook beat and raise quarter. The big question is, how did the market react? Well, as you might guess, they absolutely loved it. Investors did not hesitate. The stock popped as much as 12% in the pre-market and then just kept going, hitting a brand new 52-week high during the day, a really decisive move. And this wasn't just a small group of traders pushing the price up. This was a conviction move. Just look at that volume spike. It's nearly double the recent average. What that tells you is that the big money, the institutions, they were jumping in, resetting their positions, and really buying into this new accelerated story. All right, so let's put it all together. What's our take on the flight path for ATI from here? Look, based on this accelerating execution and the powerful tailwinds they have in aerospace and defense, we're initiating our coverage with an outperform rating. So here's our forward thesis. We think the stock is going to test new highs, probably above $115, right after their next report. Why? Because we think the market still hasn't fully grasped that these higher margins are sustainable. This whole story, it's still accelerating. It's not even close to being mature. So, for traders out there, the real question becomes, how do you play this? How do you best position yourself for this kind of accelerating momentum? Well, for a more aggressive play, one structure you might see involves using call options to really capitalize on a potential sharp move after the next earnings report. The idea is to own the stock, sure, but also buy some calls that would really pay off if the stock gaps up again. You're basically making a calculated bet that we're going to see another beat and raise quarter, which could act as a catalyst for another sharp repricing higher. This is not financial advice.